record this, and a few people can't make it. Oh, right here. Right. For those of you here, we've got Jerry, got Matt on here on the panel. Corey, welcome. What's your view on this Beige book, as you've been the only American in this country?
Good afternoon. Actually, I should say good evening to you all.
Yeah.
I've been on vacation the last 10 days, so I am literally just hopping online and having lunch and trying to get acclimated back to both work life and trading. So I apologize for coming in. And
No. I just wondered because obviously I was saying to people before, and anyone who's new here, anyone welcome. But obviously the Beige book's fairly important this time because obviously the FOMC are meeting next month. And I'll quickly, if I can, share a screen, put it up here. And we can quickly look at this before we go. I've got April the 14th, the last Beige book. And obviously we quickly go through it now. This is what it will look like. It comes out the same as the FOMC next week. It's quite a boring letter. We've seen quite a few of these, Jerry. But all I'm saying is that it's the third paragraph down I'm interested in. Yeah. And obviously the prices report, obviously with inflation and with obviously the new transitionary inflation and obviously the bottleneck. If we go through here, we have 12 reserve banks. This is the overall page. It's the one I'll look at in 5 minutes or so. Each bank that comes out, that's the same thing. So again, we're looking at the prices here from each bank. Obviously, the word inflation. Obviously, the other things that have come out. Beforehand, they were worried about the what we said, the bottlenecks. They thought it was down to the winter, the snow. Because remember, back in March, a lot of America were covered in snow. Obviously, the same things here. The disruptions due to the manufacturers in the places, lumber, wood, everything else. So we go to another bank in New York. Again, consumer spending strengthened in recent weeks, and everything else. New home sales, furniture constrained. All of these are what we've read more recently than April the 14th. Again, prices here. Prices continue to rise moderately over the period. 3/4 of manufacturing report higher prices. Yeah, and it comes in here. So all of this goes forward to basically what people are saying. What Powell says is actually wrong, and also winding on the roads now to June. Yeah, how the market is going to react to that. So over to Jerry and Matt here. Obviously, to what do you think? Will we trade obviously on words of inflation, words of bottlenecks, and everything else?
Well, I think you're going to go long dollar. You're going to probably go long 10-year. You're going to go short NASDAQ. The Dow is interesting because I've seen recently where you look at commentary, inflation comments. We've seen the NASDAQ go one way, the Dow go the other way. So it'll be interesting to see on that one. But I'd be more focused on the NASDAQ myself, personally.
Yeah. A lot of the big banks in Dow Jones, obviously, when yields go up, it's good for them. So that's why you see a tick up on Wall Street. One of the things, especially though, at the moment, if you actually just look at market structure on NASDAQ, even on 30-minute, 1 hour, 4 hour, we are consolidating around that kind of key level around 700. We've had such a big push up that there's a lot of price discovery about 50 points below where we are now. So if we do see inflation and yields push up, I think NASDAQ's probably the best bet in terms of how quickly you'll be on side, if you know what I mean. In Dow and stuff, there's it's moving around, but on NASDAQ, there's a lot of room underneath where we are. Once you break below 600, there's a lot of open space.
Yeah, there's. I was looking at that myself. 200-300 points there, easy, I'd say.
Yeah, very.
Back to kind of 13.3, 13.4. That's probably what you're looking at.
Yeah, my key levels literally bang on 300. So that's what a good 300 points on NASDAQ.
All we can do is keep an eye and be ready. That's what I would say. It's holding out at the moment, but I think it's just more anticipation, really, isn't it? It's
you look at yields though. Yields are kind of consolidating 1.5 594, 596. They're not doing much. It's just up
Yeah.
2 basis points down, 2 basis
Again,
points.
sort of butting in, but remember when the Fed meet next Wednesday, the 2-day meeting, they'll be reading the Beige book more than anything else.
Yeah.
So it was massively for those 19 people who were voting. Remember, we got the dot plot as well, haven't we, next Wednesday as well?
Yeah.
In that's what they will be arguing about. And as much as Powell's been sticking to the same, banging the same drum, that we're happy with inflation at, was it between just over 2.2%. Some of those reserve banks on the April the 14th said they could see inflation above 2.4. So obviously, the alarm bells will be ringing, because what did Yellen say last week? Biden's 1.8 trillion thing's okay as long as inflation's below 2%, or as long as the yield's below 2%, wasn't it? Which you could say is almost the same thing. So obviously, this Beige book, the meeting today, as we said, is quite important, and that's why I wouldn't say we called a Zoom for it, but it's interesting because they come out every 8 weeks. So Jerry, I'm going to look at Wall Street. Matt, what you look at?
I'm on NASDAQ anyway.
And Jerry, you can do everything else. No, 1 minute to go. I've got obviously I've got live stalking and some other news things in there, so I'll shout out what I read. So so we leave it there. So again, we'll shout things out. Listen, we got Matt and Jerry and myself shouting things out. And remember, a lot of those old guys are looking for certain words in those statements and such. Transitionary bottlenecks, 2.4, and the yields and everything else. So again, if you remember last time on the FOMC, it took a while for the markets to move, wasn't it? It took about 3-4 to adjust it. Hopefully the Beige book should be fairly easy. 10 seconds ago.
It's still not up anyway.
Nothing out here.
Yeah,
the same thing when they bring it in. I forgot the two. They have to upload it, isn't it? Because it goes on the PDF format. Yeah.
It's up now. Oh, wait, it says page not found. Yeah, there we go. 1, 2, 3, 4.
Moderate pace suspension again.
Contacts anticipate facing cost increases and charging higher prices in coming months.
Basically, what he's saying so far is reading it out. It's the same as we had on the previous meeting, but slightly moderately increased. So I'm going to set it out here and put it out here on the copy on the discussion group.
Nothing on yields or NASDAQ anyway.
Beige book on balance.
Prices
increased further since last report.
Yeah.
On balance, overall prices increased further since the last report. Selling prices increased moderately, whilst import costs rose more briskly. Import costs have continued to increase across the board, with many contacts noting sharp increases in construction and manufacturing and raw prices. Same context reported continued supply chain interruptions, cost pressures, strengthening demand, however, allowed some businesses, particularly manufacturers, builders, and transport companies, to pass through much of the cost increases to the customers. So basically, that's a better, in theory, report than the April one, Jerry, yeah?
Seems to be.
If you put it on here, we got it here. Can we see that?
Yeah, I'm just taking a glance through it here.
Those are prices there. If you can see it, if you can't see it, I'm going to quickly have a look at some of the other Federal Boston. High demand for low inventory on the auto industry led to modest prices. I think it's actually a down on inflation, not an up on inflation.
There's no key, like, I'm just kind of taking a quick scan through it. There's no like key trigger words which you would expect that would be
firm prices continued across
that the algos would react to.
No.
It seems to be relatively okay. Interesting.
Yeah, it is. So in theory, it's a fairly flat.
So are they then applying the basis that given how kind of consolidated the 10-year has been for the last 3-4 months, that they're not overly concerned now? Yes, it's ticked up back into between 1.5 and 1.75, but it's refused to break higher. So are they suggesting now that that's becoming like the priced in, like the true priced in element factor into the markets, that this is kind of where it should be? In the last 6 months or 9 months has been that gradual pricing in of the true reflection of the asset. Could be. It could be.
We're seeing yields just tick back up a tiny bit, but nothing major whatsoever, to be honest.
So I think, as we said there, Jerry, is that they're basically saying, although they've increased since the April one, they've increased within what they're happy for it to be, isn't it?
Yeah. Yeah. I think
the market has not only hasn't moved, it's ticked up somewhat.
Slightly. Wall Street's gone up slightly.
Yeah, it's a bit weird, really, because I think when you think of the CPI and the retail sales and the construction thing, those figures were I would say slightly damning.
Particularly because they're leading indicators as well, so they're giving us a really concurrent image of how the economy is performing. So when they're doing really well, that's suggesting that inflation is starting to creep in gradually, and they're not really too worried about it. So are they wrong? Are they right?
Well, I think they were more worried about it in April than they are in June.
Yeah.
And obviously we've got a week to go for the FOMC, so that's what they'll be reading. So I think you can safely say that Powell's going to be singing from the same hymn sheet. Those of you, I must apologise. I did say this morning that Bostic and Kaplan and Evans will be talking, and it'll be very interesting what they've been saying. It has come out that they're talking on the panel about racism in America. So I think they've probably got more to talk about that than have currently in that Beige book. It does seem to me that on the previous eight weeks, I do think I'm sort of wearing tinted glasses here, Jerry.
Yeah, I just think it's kind of funny because all the leading indicators have shown that the economy is doing quite well. So naturally enough, you would kind of assume that when you look at the leading indicators, you would suggest that inflation's creeping back in, and that they would be starting to kind of factor that into their commentary. But they're happy to brush that off. So that's the big thing that I'm kind of noticing, which is interesting. It's very, very interesting at the moment.
Yeah, I mean, it's weird because there's almost a zero reaction and to what we expect it to move one way or the other, and therefore, I suppose with the ISM out tomorrow and the non-farm payroll, the interesting one out there, the question to all: why is Mr. Powell speaking at midday on Friday? Which, please tell me, if that's about, is that 6 a.m. in New York or Washington time?
It's 7 a.m. I think, is it not?
7 a.m. Rather early time for the central bank. It was. I mean, that's a normal time that Mr. Trump used to tweet from his throne in the toilet when he was president. So that's the other thing going out. They're looking forward. Obviously, we've got the ISM out tomorrow, and obviously, I think Mr. Bailey's talking. But obviously, Friday, Mr. Powell at midday. It's obviously interesting because now, if there's anything wrong with the Beige book, obviously that he could use as his last sounding board before the FOMC. And obviously we've got non-farm payroll, which those who remember last time was way out from where it was, but the market reacted completely the opposite way because obviously it obviously found out that out of the million people who did find new jobs, the reason they didn't take them up because they were getting paid more to stay at home. So again, we've got to bear that in mind. Yep. Matthew, what do you think? Anything going on?
Absolutely nothing. The yields ticked off.
Have you managed to take? What have you done with your Nasdaq?
I have my stop loss in profit, like 10 points above where we are, and that's about 50 points on side. And I'm just going to leave that and see what happens.
But I mean, especially if we look at it outwards, the economy has expanded at a faster rate. So I suppose if we're looking at it not as a minute trader or an hourly trader, that is in theory bad news. Yeah.
Yeah. It kind of seems like they just try to brush it aside rather than face it. You know what I mean? Like, it is easy until there is like concrete figures that can deny what they're saying. It is much easier for them to just pretend everything's fine. Do you know what I mean?
Right. Yeah.
Like,
Also deniability.
Corey,
Yeah.
interesting one to ask you, Corey, because obviously you've been on a holiday. Very nice of you to be on holidays. Most of us in the UK have to work really hard. Anyway, what do you think on that news?
1 second, Neil. I apologize.
He's probably sipping a cold rum somewhere on the beach.
No,
That's
no. I've
dude,
been-
for the
I've
last
been
3
out-
days down in Cornwall.
I've literally been out the last 10 days. We've moved and then we had family in town. So I've been out of pocket really. So I guess I didn't know what to expect today. I'm literally just hopping back into the markets for the first time out 2 weeks. So
the only reason I ask it, and obviously from trading for a few years, it's always good to ask someone who's been out in the market for a while, because your view will be extremely fresh.
yeah, it is fresh. And I had no intention of trading today. It was literally just hopping on with you guys and I wasn't going to take a trade one way or another, but just going back to Powell speaking this upcoming Friday at 7 a.m. I find that very interesting, and I'm really interested to find out what Biden plans on doing with him, especially since his term is up in February, I believe.
Yeah, February 22. Yep.
So if you recall, the last time he spoke about, I think it was the Wall Street Journal. There was an interview with him, and one of the reporters had asked if he was planning on, if he had the opportunity to continue on as chair of the Fed. And I guess I took that as he was a little indecisive on, even if he had the opportunity to continue on, would he even want to do that? I guess that's, so I'm waiting for that.
So in a way, you're saying that the conspiracy theory is that if he is going to say he's not going to take the second term, because he normally gives 6 months notice, and he were probably close to that, he basically does it with the market shut than being open.
Correct.
Yeah. Okay. I'll go with that too. Yeah. Yeah. What do you think of that, Jerry? Yeah.
That's good food for thought.
And basically, my second question I was going to ask Corey is that, does that mean that Yellen can't stand, because obviously being her Treasury Secretary and also a Democrat, can she leave her Treasury Secretary job to take over as head of the
to take on that other role? And I don't know who they'd bring in for the Treasury, but I honestly don't think that Yellen would leave her post at this time. I don't think. Yeah, I really don't think that she would leave the Treasury.
But on the grounds that if Powell did resign, we would expect the Dow to drop what, 2%, 3%?
Oh, at least, absolutely.
Yeah, I'd go with that. Yeah.
Or even potentially up to 5, maybe, depending on.
I mean, he's liked by Democrats, Republicans. I think he's served well in his post. I don't anticipate Biden would want to replace him, but you know.
But I think because Trump sacked Yellen because she was a Democrat. Is that fair?
Yeah.
So
absolutely.
So therefore, Biden may sack Powell because he's a Republican, just because
it's. That could very well happen. That could very well happen.
Yeah. Oh, I mean, that's an interesting thing to come on, and obviously for anyone else who was out there, so that'd be midday Friday before non-farm payroll. So again, that would be massively.
The market could be waiting.
It would be before market open too. So I it's very unusual for the Fed to speak that early. It's I believe it's 7 a.m. here on the East Coast. So it's anything could happen. But that was my first thought when I saw that this week. Some type of possibly.
Obviously, as day trades, we're putting 2 + 2 together and coming out with 58. But however, it is weird how if he does, and we know it's any time now, any month now, how it would spook the market. So it's weird that Corey being from the USA, he thinks something is weird. So all that will do is add conspiracy coming into today, tomorrow, and Friday. So anyway, yeah. Thanks for that, Corey. We'll probably wrap it up there if it's fairly quiet, because now we're trading a normal Wednesday. Have you got a Zoom tonight, Jerry?
No, I did one last night.
All right.
So, yeah.
And you're not doing one tomorrow?
No, I'll probably wait till Friday till we sum up. I'm just actually looking at the NASDAQ now. It's coming off slightly, so it's worth keeping an eye on the NASDAQ.
About 20 points, yeah.
Yeah. So, I mean, I think going on ahead of that, going into the close, I think, I mean, guess right, Wall Street's just gone negative, isn't it?
Yeah. Looking there, like the yields have not moved whatsoever, but NASDAQ's just down another 10 points. NASDAQ's down about 30 points, 40 points now. But like the yields have not moved at all. I don't even mean like they've ticked up. They have not moved. So yeah, maybe it's just like the delay with no algos. You might see a reaction.
Very quiet, though.
Yeah, but we're only 10 points away from that like 600 level. So if it does tick down there, it'll be really interesting to see what happens.
Right, I think we'll wind it up there. But thanks you. I hope that helped. I mean, yet again, sometimes when we do the live Zooms, you don't know what we're going to get, but maybe there's a bit of insight there from Corey about Mr. Powell on Friday. So obviously we'll come back and obviously now have to do a Zoom on Friday at midday to wave goodbye to Mr. Powell whilst being very short. All right then. Well, hopefully that helps, and we'll see you tomorrow morning. Have a good day, Corey.
Cheers, Neil. Have a good one all. Take
care, everybody.
Yeah.
Cheers. Thank you.
Cheers.
Cheers, guys.
Cheers,
Cheers.
Neil.
Thank you.
Yeah, bye.